So we have a lot of experts that you've heard from already. I'll just have them kind of go through, give a little intro about themselves and just the company, just to brief you guys. I'll give you a brief about myself again. My name is Michael Berger. I'm the founder of Technical 420, as well as Stonebridge Partners, kind of a business with Anthony and I. We're an IR, PR firm. We have been focused on the cannabis industry for the last 4 years, had an equity research background from Raymond James. So my whole goal is to help investors focus on quality companies and avoid the shit, I guess, best way to put it. There's over 400
companies. I like the
companies.
technical term.
So, there's a lot of opportunities in this space. You really got to be careful because you want to focus on companies that are actually executing. I think we've done a great job putting together a group of companies that are executing on all cylinders. I mean, TGOD with over $250 million raised to date. You have Aurora, global cannabis leader. Emerald Health, they're making waves, small cap, big partnership, but undervalued opportunity. Same with Invictus. One thing that I find exciting is that you have $2 billion businesses and then two less than $1 billion businesses. It's interesting to look at these four companies, compare them all together, and you see the upside. Well, obviously, this is just the first inning of a multi-decade growth cycle, so don't get caught up on these being bigger because they just have, you got $300 million in cash. It's pretty incredible at this point. But I want to let them introduce themselves, talk a little about their companies. We'll get the questions flowing, and we'll keep this rolling. Brett, you want to start yourself?
Sure. Thanks again. For those of you that weren't here, Brett Allen, Executive Vice President with the Green Organic Dutchman. Previously, one of the founders behind Organigram, then Emblem Cannabis, and now TGOD. Kind of head up the investor relations and business development side for the company. I'll keep the rest for Q&A, but again, thanks for coming out.
Yeah, I'll keep it short too. I'm Mark Lakmaker, Director of Investor Relations and Corporate Development at Aurora Cannabis, global cannabis company, vertically integrated, horizontally diversified.
Push button.
Working now?
Yes.
I'm not a technical microphone expert, but I am the CEO of Emerald Health Therapeutics. We are also a vertically integrated cannabis company. We've been growing cannabis since 2014 with a real life science focused approach to the business.
I think most of you are here. Dan Krasnick, CEO. I guess one of the differences between being under $1 billion and $1 billion is the CEOs come and talk to you, but
That was great.
Sorry, guys.
That's fine. We'll get that one day.
Oh, that was a great intro. Beautiful. Well, I want to start with TGOD. Brett, you guys have done an incredible job executing. Can you brief up 3 reasons why you guys are a company to look at and take a solid look at as an investment strategy? Keep in mind, this is my largest personal position. Just want to disclose that. I haven't said that before.
I think we've done things a bit differently to a lot of our peers. The first thing we did, and I mentioned this in my presentation, was the way we focused on the retail investor, and that I think is going to pay off for us in a few different ways. So as I said, we took no institutional money. The first technically institutional investor is Aurora, and then we've taken some through the IPO, but we built a solid base of kind of sub $50,000 investors from people across Canada and the U.S. And that's kind of created an army of people out there that are out talking about our company and what we're doing. Obviously, that can pay off in a negative way too, because you're going to have that press if you don't execute. So we've certainly focused on that. And then the other side, obviously, the organic branding of the company has been, it's in our name. It is our company. And I think that's something that's going to pay off. Building a brand, building recognition, building trust and loyalty. And it's definitely a barrier to entry. It's not something that you can go and acquire another company of. There's no one else doing it on a large scale other than ourselves. So I think that'll pay off well. We're obviously very well funded at this point. We've got about $250 million in the bank, and are starting to deploy that through the fully funded build-outs that we're doing. And then also internationally, there's a lot of stuff that's taking place right now. So it's going to be an active time for us. we're, call it 6 to 8 months behind the big four, soon to be big three. So there's going to be a lot of growth opportunities, a lot of international expansion. I think a lot of excitement to go. So, at the very least, walk away and keep an eye on what we're doing. I think we'll surprise and make some people very happy.
From the international standpoint, Aurora has been nothing short of a leader in this market. Can you talk about the top 3 markets you're seeing right now, and also 3 that you want to look at in the future that investors should be watching?
Okay. Internationally, I think the biggest market for us right now is, let's take it as a whole, rather than giving the top 3. I'm just going to say the EU. Within the EU, obviously, Germany and Italy, with between them over 140 million people, and broad national insurance coverage of cannabis, which keeps prices nice and strong, and keeps a lot of margin in the system. Those are incredibly important markets where it's very important to have an early mover advantage, which we do by actually having people on the ground, by owning a distributor there.
Perfect. Emerald Health, Chris, you guys have probably one of the most exciting joint venture partnerships going on with Village Farms. With the scale of that, can you kind of talk about that as well as the recent acquisition you guys made?
Sure. Why don't I start on the recent acquisition we just made? We just acquired a company in Quebec called Agro Biotech. So they're a licensed Health Canada producer. They're an indoor facility, obviously in the province of Quebec. And one of the difficulties of growing indoors is it's very, very expensive. So cost of power and cost of hydro is a big deal. And in Quebec, those are both low. And so we acquired them about 2 weeks ago. And it also was in nice contrast to our other growing styles, which we're using in British Columbia, which is hybrid greenhouse style. And for those of you who have spent any time in Canada, you'll know that British Columbia, particularly the southern part, is relatively warm compared to the rest of the country. So it's actually a place where you can successfully grow high-grade cannabis in a greenhouse. The rest of the country is a little more difficult to do that in. And so when we started looking at ways to grow large volumes of cannabis inexpensively, we started looking around to people who knew what they were doing. Our management team was not experienced in large-scale greenhouse growing, but we found a management team that was and is. And that was the Village Farm team. So they have, I think in their investor deck, it says something like 750 years of master gardener experience. Those numbers are always big when you add up everybody. But for me, what's more important is that they have been growing in that facility for over 25 years. They have the labor pools set up. We have the people already to grow and produce this product. It is a non-trivial exercise to get the harvesting set up properly so that you have you can manage your workforce. There's over 300 people that work in this building just harvesting. And so that's the expertise that we tapped into with that joint venture. We recently announced that Emerald has actually purchased 40% of all the product that's going to come out of that joint venture for 2018 and 2019. So not only do we have this joint venture and all the upside associated with that, we just secured a massive amount of product supply. That first phase that we're building out in that joint venture is 1.1 million square feet. And it's going to produce conservatively 75,000 kilos of cannabis per year. And so we've just acquired 40% of that.
Well, it's a significant acquisition and moves over there. Dan, you brought up an interesting standpoint from valuation earlier. Can you hit on your company's valuation compared to what you guys are currently doing and compare it versus what's currently the average in the industry of what we're seeing?
Sure, yeah, I hit it a little bit in terms of where we are today. I think a big part of the valuation that we receive of being sub 200 million market cap is partially because, as I mentioned before, we're not like an apples to apples comparable to some of our peers, and that's because we're not selling. We're in the final stages of getting sales license, as I mentioned, and that should be happening in the coming weeks. Could happen today, could happen tomorrow. We just never know with Health Canada. And when we look at what the history has shown with some of these other companies that are in the space, cultivation licenses, if you look at Canada, they're becoming a dime a dozen. There's like a new one every week or two, and so quite quickly we've gone from a very limited number of licenses to over 100 plus licenses. And if history repeats itself like it did in Colorado, where they just continued to issue all these licenses, there was a flood of product, and all of a sudden prices became depressed. And there's big issues in Colorado, and I think the state got maybe a little bit too greedy in terms of collecting all the taxes, and then didn't think about the bigger picture. And if that happens in Canada, that it may happen, but it's not going to happen in 2018, not going to happen in 2019. So a lot of these licenses are just getting licensed now, and it typically takes about a year before you get sales license. So, I think what we'll see, back to that first mover advantage, I think, everybody that's sitting at this table is going to have that into the recreational market. We're all going to kind of be competing in a sense that, there's shelf space, there's provinces, each province is doing something a little bit unique. So it'll be not only domestic, but also the international expansion that will get kind of our company's valuation up. And then, like I said, the near-term sales license should definitely see a spike in the coming weeks to months.
Thank you for that. I want to open it up to the floor for questions as well, since I'm sure there's been plenty. Start with you.
Mark, what's Aurora's long-term strategies to become the next Philip Morris, or is it to be taken over by? I can't hear from you.
What's Aurora's strategy to become the next Philip Morris or to be taken over by a Philip Morris? I'll repeat the questions so everyone can hear them.
Okay, in those in those absolute terms, we would want to be the next Philip Morris. But then the Philip Morris with craft, but better execution on that brand. I think where the cannabis industry is going, what makes a successful company, and I've said it before, is to be more than a producer of cannabis flower. It's more than just cannabis flower and oils. It's being very broadly diversified in interlinking industries where you're moving into areas where there's higher margins, where you've got strong representation through distribution channels.
Adam?
Question for T-Dot. If you could maybe expand on the bull case for someone looking at it is, I really like this company and everything they're doing, but 700 million market cap, revenue hasn't sold. What kind of growth potential there is from here?
Yeah, I think, so you pull the cash out of our market cap, take the intrinsic value, you're at 600 million. But we said this from the start. As my colleague here just said, it's not about growing flower or selling cannabis. And there's been a lot of people rushing to bring product to market, and create $2 million in revenue. Even if you've done 10 million in revenue and you're at $1 billion market cap, I find it to be quite insignificant. And I think there's been companies that are rushed to bring product out and have damaged the brand. And for us, I've said this is consumer packaged goods and it's building a brand. We've got no interest in growing hops for beer. Do any of you guys know of a farm that grows hops? No, but you know who, Anheuser-Busch is, you know who Labatt's is. So, for us, the big value driver is creating a vertical integration of all products that come from an organic base. And it's gaining that shelf space. As we said, it's going to start getting crowded. There's a lot more producers coming out. To date, we're the only company in Canada that will be able to supply internationally and the entire Canadian market a consistent supply of organic products. And that's whether it's flour, whether it's oil, whether it's beverage, whether it's edible. And I think this industry is going to come down to being 3 or 4 players at the top. And you can have a lot of craft players after that. You can have 3 or 4 players, and I think one of those players, we've got some catching up to do. Like you said, we don't have the sales yet. But what we do have is the large-scale production coming online, the organic production. And I think that will secure us a spot in those 4 automatically. It'll secure us premium shelf space. And it's going to break us apart from the pack when this industry does get commoditized on the recreational side. You are going to see price compression. You are going to see an oversupply of product. You probably got about 3 years to go, but believe me, there's an oversupply of product coming in Canada. So you even need, for the domestic market, you need to have something that really stands you apart, and I think we've nailed that. And then internationally, through partnerships and stuff we're doing, I think we'll garner that as well. We'll be able to take the brand that's established in Canada, in North America, and export that brand and that IP internationally as well. That's where I see the growth coming on our side.
One follow-up to that, thank you. What sort of premium do you guys expect organic product to get in the marketplace versus 20-30%?
Yeah, so the question being, what do we see for premium pricing for organic product? Right now, it's about 33%. I would tell you that we'll give a lot of that up. And that falls into the strategy of building that brand. And if we can have product on the shelf that's certified organic for much the same price, leave 15% of that premium behind, I think we're going to have a lot of people pick that product up and give it a try. And then if we're able to deliver on the quality, the consistency, and the service that come behind that, I think we're going to have a really loyal followership in patients and in customers.
Yes, sir.
This is a question for the whole panel. Been listening to your presentations, and there's a lot of cannabis capacity coming online. Have any of your companies conducted research on the possible market size? To your point, you're talking about 3 years from now having kind of a collapse. Is there any data on what you expect the market to be, not just in Canada, but in other countries as well?
I can take that. If you look at the medical market alone, we're looking at at sort of towards maturity at about 10 million kilograms a year. We're looking at probably $180 billion plus market, and depends on what you all include. But I think further to the point that was made earlier about a lot of supply coming online in Canada, that is true. But the international markets are characterized by a huge excess of demand over supply for the foreseeable future, because there's none to very limited domestic production. It really has to come from countries like Canada. There will be some countries that are going to bring domestic production online, but it's going to be small quantities. So those companies in Canada that are able to export, and it's not simple to do that. Certain markets, I've said it before, you need certain certifications that are not easy to obtain, are going to be able to shift their products into markets where the margins will remain much more strong. So medical, 10 million kilograms on a global scale. That excludes Asia. Asia is still a little bit of an unknown. And then we do anticipate that recreational or adult consumer use, as we like to call it, will spread.
One major benefit
that does include, North America sort of as a whole is probably about 4 million kilograms. Europe is another 4 million kilograms. Latin America, probably 2 million. Australia, about 0.2 million, I believe. And then there's other markets that are as yet unexplored.
One thing that Canada is benefiting from is all the fund flows. I mean, billions of dollars has entered that sector in the last 2 years. Aurora able to use their stock as a currency. A lot of these companies could use their stock as a currency besides for having all the cash on hand. So when these new markets open, they can make investments of 10 to 50 to $1 billion to acquire the leading players. So even when these new opportunities arise, these guys can take this capital, plug it in other markets, and then not really have to worry about that production capacity issue, which is going to be an issue, but in due time. Brett in the back.
Patients are there currently in Canada? Medical.
It's about 300,000 right now. It's been growing at roughly 10% a month. That'll probably even out a little bit, but there's still a lot of growth in the system. There's lots more people that are becoming comfortable with cannabis. And it's not just people, it's physicians. The number of physicians is growing. Canamed, one of our subsidiaries, have built up a network of over 5,000 prescribing physicians through CanvasRx, our patient outreach and education organization. We reach a lot more other physicians as well. So that interplay of people becoming more comfortable with cannabis as a medical compound and more research being done, that driving more acknowledgement and comfort with physicians, that is really going to drive that market for the foreseeable future.
I'll just add one comment on that, so the medical market is likely, the number of patients is likely in the near term not going to go up all that much. The recreational market will go up a lot. But with medical patients, licensed producers can maintain more of the margin because they can ship directly to medical patients. So there's no middlemen that step in the way. So it's easier to do, say, an Amazon-like direct-to-customer versus recreational, which you need to go through. You know, the retailer is going to take some margin, the wholesaler is going to take some margin, and so on. So there's a different profitability on those patients or on those customers.
So that would bring up another question. Do you own your patient base, or is it outsourced through these variable physicians and practices throughout Canada?
No, you don't. You don't own. You,
I may have misstated that, but I'm curious how you attract and maintain your patients.
patients can become customers of any licensed producer, and it's frequently based on a recommendation from a physician. And so providing evidence or information to a physician so that they preferentially choose one thing over another is how the tactics would work there.
You guys wouldn't know like the value of each patient, would you? I know it's a tough question.
It's tough to quantify, but if you look at it, the average patient in the system is at about 0.75 to a gram a day, times 365 grams a year, times, we retail, or not retail, sorry, we sell our medical cannabis flower for $9 a gram. That gives you an idea of the value of a single patient. Now, Medreley, for instance, got a large patient base who are veterans who consume much larger quantities of cannabis. And I think I wanted to add one other point about the medical system versus the recreational system and growth. Medical cannabis, if it's medically prescribed, is tax deductible. And we're seeing a growing number of insurance companies in private company insurance plans covering cannabis. So I think those things will spread and will continue to drive for people to stay within the medical system.
I suppose equally important, the other point is that all of the customers in Germany and so on are all medical customers.
Yeah.
So it's very important, these medically focused brands, to sell the product in Germany needs to be something that a physician in Germany or a patient in Germany who has a specific condition would want to consume.
Yes, sir, in the back.
I came in a little late for the presentation, so I apologize if I'm covering something that you might have covered already. But I'm very familiar with the U.S. market and how it works. And one of the things that I've noticed, which is a real big problem for patients, is that when they go into a dispensary and they buy a bud, and let's just say they're a rheumatoid arthritis patient, and they buy something and it works really well for them. And then they go back 2 weeks later, and they don't even know what they bought. And they're talking to somebody in the dispensary who thinks he's really an expert on the subject, but is not. So my question for the entire panel is, what are you actually doing to build a brand for your product so that the sellers could actually recognize the brand and also the patients?
I can, so we've thought a lot about this because from when I first came into this industry, I came from the life sciences pharmaceutical industry. I could not believe that physicians were able to prescribe something that's basically random to their patients. How do you know whether it's working or whether it was just a change in the plant, or, I mean, it's crazy. So getting the dose, an accurate dose every single time, getting a consistent product every single time, so when they take it one time, they know it's the exact same as the next time. So at Emerald Health Therapeutics, that's exactly what we're focused on. And what we're doing is we're taking cannabis plants and blending them up so that we am measuring the exact concentration of all the active components in that plant and standardizing it so that when you take product A today, it's the same product A that you're going to take 2 months from now when you go and buy it because it's standardized. So it's very simple to get great improvements from where it is today. It's actually very, very simple.
But what you're really focusing on is you're talking about a quality control issue. What I'm talking about is you take a well-known medicine, say Rogaine. Everybody's heard of Rogaine, but if I ask you what the not be able to answer that. Everybody's heard of Viagra, but most people don't know what the chemical name is. So how do you produce a brand out there that the consumers will say, hey, that guy's brand?
It's the exact same way. It's the exact same way that Viagra. So I launched Cialis globally. So I've thought about this and
There we go. There's some
One
life.
happy customer in the room.
yeah, very happy customer. So it's the exact same thing where you have to produce a consistent product, then you have to measure the outcome that was achieved, and you publish that outcome that's linked with that product, and then you tell people about it based on the brand, and you have a nice brand name for whatever this is going to do, and it needs to speak to the people who want to use that product, and you need to fill in advertising and marketing and sales in a professional way, just like consumer packaged goods would, around that product, so that people start to say, "Oh, I need that," and you. It's also equally important that you patent protect that and you trademark it, so you create barriers to entry to other people. If your differentiation is not sustainable, it's useless. So it needs to be protectable and sustainable, so that people will buy that for 10, 15 years.
To put it blunt, though, in Canada, the issue we have right now is we cannot make comments that this is good for sleep or this is good for, like, it's something that you, like, the advertising rules, and I've actually been kind of struck by Health Canada and fined by Health Canada for this already, is like they're so strict on what we can and can't say to the market. Like, we had a picture of a bud on our website, and we got reprimanded by Health Canada for a picture of a bud.
Yeah, we are facing a system in which, and I think the way around it is not so much to market the product as the organization. And I think a lot of what my colleague just said, it's about having high quality product that is standardized from what you were saying, from one bite to the next. That's why we've got high-tech facilities that deliver consistent product quality that is repeatable, throughout the lifetime of a patient. But in terms of branding, it's the patient's interaction with the product and with you as an organization. We're not allowed to have flashy colors. We're not allowed to have pictures of products. There's many things we're not allowed to do, but we are allowed to market and to brand ourselves as an organization. And it's through doing things such as research. You brought up, I believe it was you, were arthritis. We have done clinical research in arthritis. So physicians who have patients with arthritis and they recognize that cannabis is a good substance to use for that, they are more likely to recommend an organization that has actually done clinical research and has got data on efficacy and things like that. So organizations like Aurora, you will be seeing a lot more research coming out of us. Research in cannabis historically has been about proving how it's the devil's lettuce. That research has fallen pretty flat. It's cost a lot of money. Probably spend more money on it than the cannabis companies between them have raised over the last couple of years. Now, luckily, a lot more money is being put into positive research about health outcomes, about efficacies and things like that. And it's the organizations that have the science-based that can really differentiate themselves, not just through that, but also through differentiated higher margin products where the repeatability of the dosage and the therapeutic utility is more narrowly targeted.
Yes, sir.
My question is, after you have your acquisition, this is for Aurora, how many shares will you have outstanding, and how does it compare with the other companies?
Okay, I don't know the number of shares of the other companies off by heart. We will have slightly over 1 billion shares, which sounds like a large amount, but what I've said before, because people talk in relation to Aurora about dilution, but let's wind the clock. Let's take back every single share that we have issued over the last 2 years. If you wind, we're not going to, we would not have been able to invest in the Green Organic Dutchman. We own a stake in the Green Organic Dutchman, which the average price is about $1.84 per share. The shares are now trading at about, what, 360? 380, there you go. So yes, we've issued share, we got capital in return, we got a huge return out of that. The strategic investments we made have made a return of well over 200% still in this market. Winding back the clock, taking back every single share, what we end up with is an organization with one facility and nothing else. We would be, you know, one of the pack. We have issued shares, but we've done great things with that. We've developed an organization that's vertically integrated, that is internationally present, that is able to sell into markets that are very restricted, markets with huge potential where, as I was saying earlier, where demand is going to be outstripping supply for many years to come. It's enabled us to develop research programs, product development, all the great facilities, large-scale facilities. Once the acquisition is consumed, nearly 600,000 kilograms per year of capacity, low-cost production, consistent high quality. So yes, we've issued shares. It sounds like there's a lot of shares, but look at the value that we're getting back.
Adam.
Can you talk a little bit about silent investment versus active, as far as to what degree are you guys involved with your different facilities? Do you guys control, build out, manage?
Sure.
the team?
Yeah, so we have the license in Alberta, Acreage Farms. We own 100% of that one, so we are quite active. We put the individual that started that company, Trevor Dixon, he's the CEO of the subsidiary called Acreage Farms. So he runs the day-to-day. We provide capital as required, and we talk about strategy of distribution into the retail market for the recreational side. So we're very active with him. He's also on the board of Invictus, so he knows all the decisions we're making, and he's very an active member within Invictus, so it goes both ways. The other asset that we have out in Ontario, we own 50% of AB Labs. We're not as active. Mark Ripa is the other sole owner of the AB Laboratories license, and he basically has gone further down the path of more of a wholesale type model. He doesn't want to go right to the retail side of things. We're working with him right now to actually buy all his product, so we'd be buying it into Alberta and distributing it from there. So that one I would say is more of a passive role that he continues to kind of build the business as he requires capital. We deploy. We just recently purchased up to 50%. We were 33 1/3 before, so that's just an example of we gave him 10 million cash so we could get to the 50% mark so we could buy the next door building. So basically, the two individuals, they're CEOs of their respective licenses, but we continuously help them, with capital requirements or HR needs.
Yes, sir.
Mark, just to come back to that dilution thing, I noticed it didn't show up on the last quarter report that the Cannabis deal was not really come to light there. Do you expect it will be on the next report, and with this new one for Med Relief, do you expect the completion of that acquisition to coincide with the next quarter report for Aurora? And the second part, with the multi-stage acquisitions that Aurora has into GCOT, is that planned as a cash deal or more shared purchase?
Okay, let's start with Cannabis. The last quarter only had 2 weeks of Cannabis results in there. So that didn't really show in any way, shape, or form. Cannabis will be fully consolidated for the entire quarter for our next quarter coming up. The last results they published were about 5 million top line. Again, that's based on the current patient base. Our acquisition of Cannabis was really a strategic, pursuing strategic synergies. If we were just interested in patients, current revenues, and production capacity, we would not have made this acquisition. It was really about brand strength and product development capabilities in the medical market and international distribution. So yes, next quarter you'll see a significant bump through the addition of Cannabis. Med Relief, we've just launched it today. We think that will be completed, if everything goes as it should. It's contingent on a few things, but it will be about August, so that won't be in the next reported quarter. But Cannabis has, Med Relief, again, brings significant revenues already. But all these companies, we're in the early stages. The real bumps come, with Aurora Sky coming online. Aurora Sky, we're already growing product there. We're completing base as we speak. We're near to completion of doing that. Once that is licensed and we're ramping up to full capacity at over 100,000 kilograms a year, that's where you'll see the real big revenue bump coming from. In terms of Canamet, we're accelerating that. We've identified a number of fairly simple measures based on our operating protocols to very significantly increase production out of Canamet, also very significantly increase oil production. So it's not just going to be Canamet's revenues on top of ours, but it's going to be Canamet's accelerated revenues on top of ours.
And as far as the acquisition or purchase into TGOD, is that on paper now a cash deal, or is that goes more dilution?
We paid cash.
So far.
Okay, so far, no, it's a cash deal. It's a cash investment, and the stipulations for the next tranches would be cash as well.
Yes, sir.
Okay, then, I'm looking forward a few years. If you, medical purposes are wonderful, and say in the United States, the insurance is low, etc. How are your companies going to fit in with, say, Merck, Pfizer?
It's way too early to tell there. I mean, you're going to see pharmaceutical companies invest in these players, but you can't predict there's no crystal ball for that right now. You see people from Eli Lilly coming over and becoming CEOs of LPs, but do you guys have a different perspective on that?
Well, I can just tell you that everything that we are doing and the way we build our products, staff our teams, the quality assurance systems we put in place, the good manufacturing practices, those are all from the pages of the pharmaceutical industry.
Yes,
So,
ma'am.
so it's designed specifically for that. They will be present.
Yes, ma'am.
Can you talk a little bit about
GW's product?
the first one to be FDA approved?
So your question is whether we'll see more of that? Is that the, yeah.
I mean, that's going to take a long time. Epidiolex has been in process for years. I don't know if this is the right team for that. GW isn't present.
But just for specifics, so the way the way science in general works is you need to target something specifically and measure what you did to that specific thing. So yes, anxiety, yes, pain, yes, cancer, yes, MS, yes, Huntington's, yes. So it's this freeing up of the research right now to do research in the U.S. on cannabis is very, very, very difficult. It's easier to do research in cannabis with cocaine, seriously, or heroin than it is with cannabis. And that's why, that really should be one of the takeaways of everybody, that in Canada is a different structure, so we can do that kind of research now without the impediments that are seen here. And so the answer is yes, this will happen.
How much do you think it's going to cost to be able to do that in Canada versus the United States? Because GW is spending, what, $100 million, $200 million to do Epidiolex, to produce this one drug, versus Canada. I mean, you guys will have less barriers.
Yeah, the single biggest cost in developing drugs is the cost of running clinical trials, and it's usually a per patient cost, and you need big numbers. Canada's no cheaper per patient than the U.S., but you can just do it in Canada, and you can't do it.
Good point. Yes, sir.
How do you separate your brands from, make them as pharmaceuticals as opposed to kind of more hippier nutraceuticals? I believe some consumers still see CBD ads.
Lots of research. Like I said, and all of us are doing this, clinical research. It's really establishing the pharmaceutical
No, I
element of the
mean,
brand.
On your end, I know it works. I mean, in the consumer's mind, as a branding strategy.
Well, when you're talking about consumers, do you mean medical patients or do you mean those in the adult consumer use market? The medical patient, a lot of branding will go as an organization, how people interact with you as an organization, and that's not just the product and the research, it's also how they, enjoy working with you, and a lot of that branding is happening online. In terms of products, it will be, based on research and, organizations that educate patients.
From a target consumer preference, there's a lot of work that's done on understanding them and developing a target product profile on exactly who you want that your consumer to be. For example, we have a product that we've done the research on it, so it's 45 years plus, equally male and female, cannabis naive, and current user of natural health products. And so that design helps you put together the creative and the branding and the messaging that goes around that. So you would never see a marijuana leaf on a product that is designed for cannabis naive, just as an example. And if we're targeting 45 plus, you're not going to see some wrapper on the package. So it's straightforward. So it's consumer packaged goods type marketing and branding is what's going to be deployed.
Yes, sir.
It's addressed to the panel as a whole. What's the breakdown of your share ownership by Canadian, U.S., and then other foreign investors in rough terms as it stands today?
Ourselves, management and founders, are about 35% of the company.
What is the breakdown of ownership, founders, international, Canadian, for these companies?
Yes, we're still sitting around 35% management insiders. Outside of that, probably 60% Canadian, 30% U.S., and the rest distributed internationally.
You just want to go down if you guys know these
Those numbers change day to day. Like, a lot of those are really hard to track, right? People can buy and sell shares day by day on multiple exchanges, so it's pretty...
I'm going to say it's about 75 Canadian, 20 US, and 5% international, but that's growing.
It's 35% insiders, and I don't know the U.S.-Canadian split.
We've got about 8%. I hold about 10%. Our guy out of Alberta owns, and then we've got another 10% in shareholdings, and then we would get about 20% in the U.S., and the rest is Canadian.
Yes, sir. The question is, what happens if someone in the future reverses Canada's plan to legalize recreational marijuana?
I'll take a jump on that. I think, Canada, the divide between the left and right is a little less than you guys see down here in the States. But the numbers have spoken pretty clearly across Canada. The people want it. The government empowers being elected by it. And the policy being put through and to pull that back, I don't think any government that ran or tried to compete against the Liberal government with that as a platform, I don't think he'd have a chance of getting elected, to be quite frank. It's not something that's going to be wound back. I think the worst case would be see it slowed down, or you see some more regulations put around it. But the polls are far in excess of 50% of Canadians are in full support of recreational adult use cannabis. I think Canada's gone, in my personal opinion, I think we've gone past the point of an individual party being able to roll it back. The wheels are well in motion.
Let's get a new one. Yes, sir.
Yeah. Can we talk consolidation for a second?
Yes.
You guys, you get a pass. Chapter today.
I have no idea what that word means.
My family's very excited. But my question is for Brett. what have you, you know everybody at that, your competitor, the other company, you worked there, you did your thing. Is there any possibility that you guys would be interested, or is it too early, or, you know what I'm kind of.
No, so I think the easy way to answer this is probably one of the best answers I've heard was actually my colleague speaking earlier. It's not about adding scale or buying a company for the sake of buying a company. If the problem you have in some of the other provinces, Organigram is a fantastic company. The cost of power is at least twice what ours is. There's some advantages to different jurisdictions within the country. We're aggressive right now on international expansion. We're doing a lot of stuff down here in the U.S., brand and licensing wise. It's a tough question to talk about without getting offside. There's going to be some moves that will take place. What those end up being and how they shape up, you'll have to wait and see. But
Thanks for that nothing answer.
I'm not sure I can answer that any more than.
Yep. Any other questions? We got about 10 minutes left. Yes, sir. Fuck that guy. I can handle part two. So then we'll leave you part one. When it comes to the U.S., you see the premiums that you have in Canada because you're operating under a federal environment. United States, you see these companies that have strong numbers like MPX, Bioceuticals, they crushing revenues, but their valuation's nothing compared to these guys. Once these fears are gone, these stock prices are going to definitely appreciate significantly, but it's also going to leave a lot of room for their neighbors to the north to make investments like they have been through different vehicles, not through their companies, because they don't want to get in trouble with the exchange. The U.S. is coming around. It's not a concern. Donald Trump gave us a positive with what he said to the senator in Colorado. It's a step in the right direction. Sessions' days are numbered, in my opinion. Him and Trump have been butting heads forever, and he's a jackass, so, let's get him out of there. Part one.
I want to add something to that about the US for us. We're a TSX listed company, the most senior exchange in Canada. The TMX, the owner of the TSX, has adopted a interesting policy that precludes companies listed on the TSX or any of the TSX exchanges from investing directly in cannabis operating assets in the US. So for the time being, we can't invest in US cannabis assets. That doesn't mean we can't do anything in the US. There's interesting technology. There's other interesting stuff happening in the US that might be of interest to us. But as long as the current regime stays in place, we're not able to invest directly in operating assets in the US.
We got time for one more question. So,
So since you guys are obviously in the cannabis, where do you think states' rights and banking is going to go? Credit cards, processing more illegal sales.
that's where this all starts. It all starts with states' rights and banking. Once you get to banking.
Jeff Sessions go, his problem is there's track and trace on marijuana. He's finding marijuana from Washington State all over the South. That's his problem. He's not going to roll back states' rights on marijuana, federal and state. So
It all starts with banking.
you guys have to be concerned about that, especially.
The concern should be on, a lot of patrons too. What's it going to take a tragedy for them to actually make some changes? You're setting people up for danger. You're playing with fire for no reason. So, banking is where this all starts. Once the Treasury makes some reform.
These guys have to have that on their mind. Their financial.
Well, for us, it's a bit different, right? at least us that are not operating here in the U.S. because of those rules. We bank with the big 5 banks in Canada. It's a
Yeah, it's still
very,
Canada.
very different process.
Federally regulated and legalized, so it's not an issue.
We deal in credit cards, not cash.
Last question.
My question is, in the US, we have Rule 144, President Jobs Act. In Canada, I hear capital raise is a little less regulated. If you're taking US money versus Canadian money for capital raise.
Yeah, sure. So, we just completed our IPO process. There's for the disclosures you have to deal with. It's a bit more complicated when it comes down to US. So for us on the raise we just did, when we were doing our private offerings, it was a lot easier. Because this was the public listing that we just did, it became a bit more complicated. So people basically had to be friends and family of the company for this final round. Whereas previous rounds it didn't. You just have to be what's called an accredited investor. And those numbers differ slightly from Canada to the US, but generally it's about $200,000 a year in income household. Or is it $1 million assets now?
$1 million.
$1 million in assets. If you meet that criteria, you can generally invest. But then you start running into some issues with the brokerage firms and banks in Canada who have exposure to business in the United States and are worried about getting offside with your federal regulations. So we may be allowed as a company to accept you as an investor, but you may not be able to do it through your brokerage firm or your bank because of the federal illegalities in cannabis. So we definitely ran into some issues there. And a lot of the brokerage firms won't take U.S. clients anymore. Yes. That depends on the company and the way you're listed. If you do a prospectus offering, which is a larger form of disclosure, it can be free trading. We've got our private rounds have 6-month hold on the stock we've raised. So that can very much depend on how the company structures the financing themselves as well.
All right. Well, thank you all very much. We have to cut it for our next speaker, Brett Roper.